What's up, guys? I'm Kay Scholl. Welcome to another financial awareness video. So you're a realtor. That's awesome. I love real estate. I was in the industry for about 7 years and had my broker associate's license for a while before becoming a financial advisor for the past 8 years or so. I've worked with a ton of realtors throughout the country, and in this video, we're going to discuss the topic of financial planning for realtors. We'll review how to structure your business, paying taxes, how to stabilize your unpredictable income, paying off debt and saving cash, and how to build income streams and grow your net worth so you're ready for retirement. Whew. Okay, let's get to work. Financial planning for realtors starts with the basics of how you structure your business. As we get started, let's remind ourselves that you can run your revenue and expenses through yourself as a 1099 individual or through a company that you create. Now, this isn't a video about LLCs, S-Corps, and C-Corps. You're going to want to consult with Google and your CPA to decide which of those options is the best one for you. From my experience and research, it seems most realtors tend to get paid in their personal name, then simply spend the money from there with very little planning or regard to taxes, business expenses, or even saving for yourself for retirement. If you're brand new to real estate sales, this may be okay for a little bit while you get your feet wet, but if you want to take your real estate business seriously, then you need to take your business logistics and planning seriously as well. Getting paid through your personal name isn't a recipe for disaster because many people do it that way, but it typically leads to other financial and business behaviors that make your life more difficult than it needs to be, such as not tracking your business miles versus personal miles, spending marketing and prospecting dollars without a clear goal or budget, using your personal debit or credit card for client lunches instead of your business account, not taking advantage of tax-qualified retirement accounts to maximize reducing your taxable income, not properly saving for taxes, and the biggest one that is usually overlooked, not smashing that like button. If you do decide to run your real estate business through a company you create, it simply makes you feel more proud and legit when you tell people about your real estate business. If you take yourself more seriously, other people will too, and that confidence will only add to your credibility when closing deals. This degree of organization also often leads to you being more intentional with your financial and business decisions. So let's talk a little bit more about being intentional and some best practices for you. First thing you have to do is recognize that you will have an irregular income stream as a real estate agent. It's just part of the deal. Check out my video about how to make a budget. I discuss irregular incomes and go over some tips there. Okay, so how do you take your incredibly volatile income and stabilize it? It's easy for me to tell you in this video, but hard for you to actually do. You have to live on less than you make and pay yourself a fixed salary every 2 weeks instead of blowing through each commission check like a kid in a candy store. As an example, if you just closed a $400,000 home and earned a 3% commission, that's $12,000. For the sake of argument, let's say your broker takes a 25% split, leaving you with $9,000. This $9,000 needs to go into your business operating account, not your personal checking account that you probably use all the time. If you're still getting paid as a 1099 individual, then here's an easy fix for you. You need to hop online wherever you bank and simply open up another checking account or a business checking account. The goal here is to segregate these funds, no commingling of this money. Keep your business revenue and expenses separate from your personal expenses. If you already have your business set up, then you'll want to instruct your broker to deposit these funds into your business operating account. Next, taxes. You need to set aside money for taxes. Some states have a state income tax, others don't. Again, for the sake of argument, let's just assume 25% for taxes. Now, I know some of you are like, oh, 25%, that's not enough. But if you're an organized realtor with a good CPA, then you know what you can legally run through your business as business-related expenses, and you know the difference between your marginal tax rate and your effective tax rate, and you know how much to save. Check out my video regarding tax deductions and tax credits. I'll bet there's something in there regarding your real estate business that you weren't aware of. Your taxes then need to be shifted over into your tax account. And if it sounds like we're talking about a lot of accounts, it's because we are. On the personal side of this equation, you've got your personal checking account and your personal savings account where you keep your emergency fund. You'll probably also have some retirement accounts or 529 accounts as well. And then on the business side of this equation, you've got your business operating account, your business savings account where you keep your business reserves in possibly, and then you also now have a tax account, which I would recommend you hold in a completely separate banking institution because that will help it be out of sight, out of mind. Side note, I would recommend that you pay your taxes quarterly so that you don't get yourself in a pinch with the IRS. If you do this, you'll have 4 smaller payments throughout the year as opposed to one big massive payment that you'll have to pay when you file your annual tax return. The 2020 third quarter estimate was due September 15th, and the fourth quarter estimate is due January 15th, 2021. Go ahead and throw those dates on your calendar so you don't forget to mail the check. If you don't do it this way and instead you elect one big massive payment, you could get yourself in a pinch where you can't afford to make that payment and you'll have to file an extension all the way until October possibly. That would put you in a situation where over those summer months, you're working extra hard not only to close enough deals and make enough of a living to live in that current year, plus save for your taxes for that current year, but you'll also have to pay back your taxes from the previous year. It's a downward spiral you don't want to be in. So let's review. Your broker has deposited that $9,000 into your business operating account, and you've shifted over that $2,250 into your tax account, leaving you with $6,750 left over. Here's the hard part. Can you live off of paying yourself a salary of $2,500 every other week? If you can, that's a $5,000 a month budget, and that's the number that you'll have to base your personal living expenses off of. And if you can do this, you've essentially created a paycheck for yourself that will happen every 2 weeks or twice a month, depending on how you set up your auto transfer from your business operating account over into your personal checking account. Go ahead and leave that $1,750 in your business operating account. Maybe transfer some over to savings if you don't think you'll need it. Because what if your next closing is a smaller $200,000 home? As a real estate agent, you always need to be living below your means and saving some of your commission checks, because what if there's a slower time of the year where you don't have enough money coming in? You would have to draw from your business reserves in order to maintain that regular paycheck of $2,500 twice a month or $2,500 every other week. Now, on the flip side, from a motivational perspective, you could just bust your butt and work so hard that there is no such thing as a slow month, but rather months that have smaller checks and months that have bigger checks. This will result in you always having sufficient income coming in for you to pay yourself a consistent salary of $5,000 a month. Then, treating your business like a business, if there's any profit left over at the end of the quarter or at the end of the year, bonus yourself out some extra money, maybe in a 1099 bonus capacity, just like some employers do anyway. Let's be real. When was the last time you even asked any of your clients for a referral? If you've worked really hard and you've done well by each of your clients and you've earned the right to ask for a referral, you should do that. That doesn't cost you anything. And as opposed to some of those flyers that people just throw away, it's pretty cheap. Staying on the topic of being organized, you need to have a profit and loss statement for your business as well as a budget for your personal expenses. Your business P&L would include all of your revenue streams, marketing expenses, prospecting expenses, client meals and entertainment, computer, telephone, office supplies, and I would even recommend a qualified retirement account line item for your business as well. Your personal budget would include rent, mortgage, food, fun money, vacations, stuff like that. You're doing great so far. So now we've discussed how to structure your business, paying taxes quarterly, paying yourself a stable salary, and having a profit and loss statement for your business as well as a budget for your personal expenses. Now it's time to talk about financial planning to grow your wealth. I would imagine most realtors are always eager to go out and buy their next real estate investment property, but I'd like to encourage you to ease into that slowly. There'll be plenty of time for you to go out and find some bargains, but for now, let's focus on financial planning foundations. You need to have cash on hand in your business reserves as well as in your personal savings account. In your business reserves, I would suggest maybe a 2-month emergency fund. And then in your personal savings account, I would recommend at minimum a 6-month emergency fund based on 6 months of your personal expenses. While you're building up sufficient cash on hand within your business reserves and your personal savings account, you also need to be paying off your debt. Credit cards, car loans, student loans, pay off all of your debt except for your mortgage. Now, if you follow the Dave Ramsey debt snowball philosophies, you probably just picked up and noticed that I mixed up baby steps 1, 2, and 3. And the reason why I did that is because the income of a realtor is so volatile. You need to have some extra cash on hand to weather you through the storms of some of the slower months, as I mentioned earlier. Because if you go 3 months without any closings, while you're trying to pay off debt, that's a scary situation and you could work yourself out of the business. So proceed with caution and exercise some judgment while you're balancing paying off debt and saving up cash. You know how I just casually mentioned paying off debt and saving cash? That alone right there could take you months, if not years, depending on how much revenue you have coming in or how expensive your lifestyle is. So prepare yourself emotionally. This isn't a microwave 3-minute dinner recipe. This is successful financial planning to get you set up for life as a realtor and investor. It takes time. Be patient and trust the process. Moving on, by now, you're debt-free except your home and you have plenty of cash on hand. You're rocking and rolling. From a wealth building perspective, I found that realtors usually fall into one of 2 buckets. Bucket number 1, realtors that only invest in real estate and never invest in the stock market because they just don't know enough about it. And bucket number 2, realtors that diversify their stock market portfolio by investing in real estate properties. Additionally, once you've gotten yourself to this healthy stage of your business and your real estate career, more opportunities are going to open up for you. You'll have to decide if you want to continue working alone on yourself or alone within a team, or if you want to maybe consider expanding and having your own team. If you are going to consider opening up your own team and maybe even becoming a broker and buying into a franchise, then you'll need to continue to save cash so that you have cash on hand to expand your business, hire staff, or possibly purchase into a franchise. Whether you continue your career as an agent or become a broker with a team, I recommend you save 10% of your gross revenue into a qualified retirement account. Could be a SEP, simple, traditional, or Roth IRA, depending on how you decided to structure your business. Check out my video called Tax Bracket Management for a more detailed approach on this topic. While you're continuing to build up your qualified retirement account, I would encourage you to save an additional 10% or more of cash for you to continuously keep on hand to purchase your next real estate property. Yeah, but why? Why do I say that? Because if you live and breathe real estate, then over time, you will begin to learn the real estate cycles in your area and can really spot a bargain when the opportunity presents itself. Then simply rinse and repeat. Save cash, close on a good deal, rent the property out, save cash, close on a good deal, rent the property out, let them pay the mortgage. Creating rental real estate revenue streams and building a stock market investment portfolio that you could live off of for life may sound a little overwhelming, but I assure you, it's easier than you think. If you're serious about learning how to do that, click this video right here called Am I Saving Enough? If you have any questions for me, let me know in the comments below, and do me a favor and tap that like button if you got any value from this video. I appreciate your time. See you in the next one.